Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Hope you had a nice Chuseok holiday.
Good afternoon, Devin.
Well, let's start with the latest from the Fed and its meeting this week. They say tapering or reducing asset purchases could soon be warranted. Interest rates staying put for now, but Powell says the tapering announcement could easily come in November. What's your takeaway from the Fed's meeting?
On Wednesday, U.S. Fed finally decided to reverse its monetary policy from expansion to the normal policy. U.S. Fed's FOMC indicated in its post-meeting statement Wednesday that it could start to reduce or taper its $120 billion in monthly asset purchases as soon as its next scheduled meeting in November 2nd and 3rd. Mr. Powell, the Fed chairman, said that the Fed officials hadn't made a formal decision on how quickly to reduce purchases, but most agreed that a gradual process that concludes around the middle of next year is likely to be appropriate. It means that to conclude those purchases by the middle of next year, a Fed could decrease asset purchases by $15 billion a month if they begin the process October of this year. Also, FOMC left its key interest rate between 0% and 0.25% on Wednesday, but interest rate will be stayed at the lower level until 2022.
Well, over to China, a lot of attention on the situation at Evergrande. Of course, the real estate conglomerate. It's on the brink of default, and yesterday agreed to settle a domestic bond coupon payment. A lot of market watchers worried about what actual default would lead to. Some even talking about a Lehman Brothers situation. Tell us about that and your view, Professor.
In last week, global financial market has been much embarrassed with the rising bankruptcy possibilities of Evergrande, China is one of the biggest property developers. But as of now, market's expectation is that even if it goes to bankruptcy, its impact on global financial market and global economy will be limited. So Evergrande is not something like Lehman Brothers situation in 2008 global financial crisis. Market participants expect that Beijing to let Evergrande default on at least some of its debt, leaving foreign investors to foot much of the bill. They also expect Beijing to protect the many domestic home buyers and suppliers. The developer owes apartment and money too. But Evergrande episodes raises deep-rooted risk in Chinese economy stemming from large debt and bubbles in the real estate market. And this will dominate Chinese stock market for years, along with generating more volatility in Hong Kong market and Shanghai market.
And at the same time, you could say some of the fears over Evergrande have eased for the reasons you describe, and also with the Fed still rather dovish on tapering. U.S. stocks were quite a bit higher on Wednesday, though we're still not back to where we were a week or a month ago. What's the story in the global markets?
During the Chuseok holidays in Korea, global financial market has gone through a pretty lousy situation related to Evergrande insolvency issue. U.S. market dropped over 4 straight trading days as Evergrande debt situation worsens from last week. But on Wednesday's market, the pressure from Evergrande shock is much lessened, and U.S. Fed's decision on leaving the key interest rate at current level and its timetable on tapering were kind of well accepted by market. Dow Jones average gained by 1%, and tech-heavy Nasdaq also gained by 1% on Wednesday. European markets over London, Paris, and Frankfurt all increased above 1% for the same reasons on Wednesday.
And here in Korea, coming off a long holiday, of course, stocks were lower today and many of the same issues at play. One name that's done well in the past couple of sessions, though, is Korean Air, looking at a likely boost in earnings to come soon. Tell us about the domestic market.
Domestic stock opened lower today after the 3-day Chuseok holiday, following comments by U.S. Fed that it could start tapering as early as November and growing words over a default of giant Chinese real estate developer. Kospi dropped by 0.4%, and Kosdaq also dropped by 0.9% today. In Kospi, domestic individual and institutional investors net sold stocks, but foreign investors net bought stocks. As you said, particularly including Korean Air, all airline company stocks gained more than any other sectors today. There is an escalated big hope that Korean citizens are allowed to travel out of country around November as vaccination speeds up. Airline companies' average returns for today was 4.7%, the single day.
Well, a couple of data points for you, Professor, before we go. We have the Asian Development Bank, the OECD, calling for Korea's GDP this year to grow by 4%. As for inflation, the BOK says it'll be 2.1%, the OECD 2.2%. How are those two figures, GDP and inflation, shaping up as we approach the end of the year?
The Asian Development Bank, or ADB, on Wednesday capped its 2021 growth outlook for Korean economy at 4%. As economic recovery momentum has remained strong despite the latest resurgence in COVID-19 cases. The bank's outlook is on a par with growth estimate by Bank of Korea and OECD. The IMF forecasts 4.3% growth for Korean economy this year. Korean economy, which is fourth largest in Asia, is on a recovery track on the back of solid export despite the first wave of the pandemic. The Korean economy grew by 0.8% in first quarter and 1.7% in second quarter. So it means that Korean economy is on the track of 4% annual economic growth as of now. And this year's inflation would be higher than previously expected. Earlier this year, all expected that over 2% inflation would be temporary, but as international oil price keeps on increasing, inflation pressure will be continued until the end of this year.
All right, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.